performance analysis. Nana, please be attentive. So question number 9. Who has a student mic? Okay, it is here. Sir, please pass on it to the boys, sir. Third bench, second person, yellow shirt, yellow striped shirt. Let us start with you. Question number 9. Read the question.
What is meant by financial performance analysis and how is it performed?
What is meant by financial performance analysis? So basically, we take financial information and analyze that information and determine the performance of the organization. Sir, what do you mean by analysis? Explaining one variable in terms of another variable is called as analysis. When you need to analyze something, basically what you will do, you will compare two different variables. You will compare or you will try to explain the relationship between two different variables. That is called as analyzing. It is called as analyzing. When it comes to productivity also, you are doing the same thing. You are comparing output with input and finding out the percentages, isn't it, Nana? So generally when it comes to analysis, what we do is that we compare one variable with another variable. In simple terms, we are talking about ratios or the ratio analysis chapter that you have learned in FM. What is the purpose of ratio analysis chapter? When we talk about analysis, we use ratios. In fact, management wants ratios only. They don't want the entire cluster of data. They want simple information. That is nothing, and that is only possible with the help of ratios. Okay, for example, if someone asks you to analyze gross profit, what you will do, you will compare the gross profit, you will find out the gross profit percentage, right, of last year and this year and compare it. How will you calculate gross profit percentage? Nana, gross profit divided by sales into 100. That is called analysis of gross profit. You will calculate gross profit ratio of last year, you will calculate gross profit ratio of this year, and you will analyze if there is increase in gross profit or not. If there is increase in gross profit, there will be increase in net profit. There is no standard rule as such. There may be increase in gross profit, but there may be fall in net profit. There is no standard rule that if your gross profit increases, automatic net profit should increase. Generally, it should, but there is no guarantee that it will increase all the time. So in simple terms, when we talk about analysis, we use ratios. And management also wants information in terms of ratios. Am I clear? In the same lines, we'll discuss this unit also. So let us see what is meant by financial performance analysis and how it is performed. Read, my dear.
Financial performance analysis is the process of identifying the financial strengths and weaknesses of the firm by properly establishing the relationship between the items of balance sheet and profit and loss account.
By properly establishing the relationship between items of balance. Obviously, we will use balance sheet and profit and loss account to determine the financial performance of any organization. Next, Nana.
It also helps in short-term and long-term forecasting. And
short-term means 1 year, more than 1 year. Generally, we may use this information to forecast also. That means we are going for long-term. Next, Nana.
And growth can be identified with the help of financial performance analysis.
Next.
The dictionary meaning of analysis is to resolve or separate a thing into its elements or components parts for tracing their relation to the things as whole and to each other.
Yes, Nana. So when it comes to analysis, it's all about relation. Explaining the relation between two different variables. So let me repeat that point. The dictionary meaning of analysis is to resolve or separate a thing into its elements or component parts for tracing their relation to the things as whole and to each other. So how do you explain this, sir? When we talk about analysis, just now I had taken the example of gross profit ratio, right? So when we talk about gross profit ratio, how many variables I'm taking that into consideration? 2 variables. And both these variables belong to profit and loss account. Isn't it, Nana? Now there are some ratios where we take one element from profit and loss account and one variable from balance sheet. Example, return on capital. Formula for that one: net profit divided by capital employed. One from profit and loss account, one from balance sheet, and trying to explain the relationship between the two. This is called analysis. Analyzing one variable in terms of another variable. Am I clear? Next, Nana.
The analysis of financial statement is a process of evaluating the relationship between the component parts of financial statement to obtain a better understanding of the firm's position and performance.
Whatever the point that we discussed in C, the same is covered in D, Nana. Here we will analyze the relationship between different components to understand the performance of the organization. Next.
This analysis can be undertaken by management of the firm, parties outside the firm, namely owners.
Generally, financial statements can be used both for internal purpose as well as for external purpose. Internal purpose means by the management, external purpose means by the stakeholders. Next, Nana. In short,
the firm itself has, as well as various interested groups such as managers, shareholders, creditors, tax authorities, and others, seeks answers to the following important questions.
very good. First question.
What is the financial position of the firm at a given point of time?
For this, we will use
Balance sheet.
at any given point of time, we will use balance sheet. That's the reason why when it comes to heading, we mention as on dated. Okay, next, Nana.
How is the financial performance of the firm over a given period of time?
P&L account. Next.
These questions can be answered with the help of financial analysis of a firm.
Next.
Financial analysis involves the use of financial statements.
Next, Nana. I don't think there is a need to explain these kind of silly questions. Okay. As I said, why I haven't excluded it, Nana? Because I don't want to skip any content given in our institute material. It's an elective paper. Everything will be asked from institute material. Okay. So even though it's a silly line, I have decided to keep it in the material. Next, Nana.
A financial statement is an organized collection of data according to logical and consistent procedures. Its purpose is to convey an understanding of some financial aspects of a business firm.
Next one, you can't include all the financial aspects in the financial report. You will include whatever the things that are relevant. Okay. That's why we have mentioned the term some financial aspects of a business firm. Next, Nana.
It may show a position at a moment of time, as in the case of balance sheet, or may reveal a series of activities over a given period of time, as in the case of an income statement. Thus, the term financial statements generally refers to three basic statements: balance sheet, income statement, and cash flow statement.
We all know that. Next, Nana. With that, we have completed what is meant by financial performance analysis. Next, explain the term financial statement. So this is a basic question. When we talk about financial statements, what statements are considered as financial statements? We already know three statements are called as financial statements. What are those? Cash flow statement. Apart from this, there are two more statements, Nana. One is explanatory note, which always be a part of financial statement. Always, there will be always an explanatory note given by the management as well as the auditor. Okay. Next, statement in changes of equity. Nana. If there is any change in equity, even though there is no change in equity, we have to mention the same thing. You have to mention the thing, Nana. Okay. Among the above five statements, five mentioned, the first three are considered to be the core of a financial statement. First three are must and should. Remaining, it's up to the management. If they want to include any other statement, they can include. But first three are compulsory: balance sheet, profit and loss account, and cash flow. So I don't think there's a need to go through that question. Am I clear? You can go through that question on your own. Nana. Next, question number 11. What are the basic financial statements of a firm? So what is balance sheet? What is income statement? What is cash flow? Whatever the five statements that are mentioned above, explanation is given to that, Nana. Even though we know it, let us go through that content. Okay. Let us go through question number 11. Nana, please pass on the mic, my dear. Yes.
What are the basic financial statements of a firm?
Okay, December 19 exam, MTP1 given for 6 marks, Nana. Okay, next row.
Basic financial statement of a firm. Balance sheet. The balance sheet, referred as a position statement at the year end, summarizes the assets and the liabilities as on the particular date.
As on particular date. We all know that, Nana. If you want to know position of a firm as on particular date, in terms of assets and liabilities, we need to refer to balance sheet. Next row.
Thus, the balance sheet which is a summary of the assets and liabilities of the enterprise, reflects the financial health of the enterprise as on the particular date.
Next.
The accounting equation given as assets is equal to liabilities plus
Balance sheet
equities.
should always get tallied.
It reflects in the balance sheet.
There's a blunder mistake that we make. We enter all the items and forget to tally the balance sheet in a hurry. There should be not be difference of 1 rupee also. If there is difference of 1 or 2 rupees, then you have to adjust it. Simply can't ignore it. Assets equal to liabilities plus equity is reflected in balance sheet. Next, income statement.
Income statement. The income statement, referred as the profit and loss statement or profit and loss account, is a summary statement which is based on matching of expenses with the income for a particular financial year.
Okay.
The principle is to adjust the expenses against the incomes for a particular financial year.
Yes, Nana. So here we need to adjust incomes and expenditures. And basically we need to compare whatever the income that we have earned and whatever the expenditure we have incurred. If incomes are more than expenditure, profit. If expenditure are more than income, loss. Next, Nana.
Thus, the income statement reflects the financial performance of the enterprise during that particular financial year.
Okay.
Profit is the excess of income over and above expenses.
Next, Nana.
Financial performance measured in terms of profit of an enterprise is bettered as and when the excess of services and benefits rendered towards the society over the services and benefits received from the society is maximized.
Okay, Nana. In simple terms, when income is more than expenditure. What do you mean by income, Nana? Whatever the income that you have earned by providing services. And what do you mean by expenditure? Whatever the money that you have paid for receiving the services. Okay, here the key point is not these two, but the terminology. Now the same thing can be asked in the examination as MCQ. When the excess of services and benefit rendered toward the society over the services and benefits received from the society is maximized, then the firm will get what? Now you may answer it, Nana, but you should be able to identify the meaning of it. If they use the term income and expenditure, it will be very easy for us to identify. But rather than using income and expenditure, what they have used? Excess of services. See, this is the key point here. Services and benefits rendered means provided. When you provide something, automatically you will receive money. And when you are receiving services and benefits, automatically you need to pay money. So instead of using the term income and expenditure, they are using something else now. There's nothing but complete management terminology. Okay, so that is about income statement. Next, Nana, cash flow statement. What do you mean by cash flow statement? It shows cash inflows and cash out. For that purpose, we'll divide the cash flows into different types, right? Cash from operating, cash from investment, cash from financing. 3 activities: operating, investment, and financing activities. As per AS. Am I clear, Nana? Okay, you people should be well versed than me. I did my cash flow when I was studying. Later on, I did not touch cash flow at all. So I have a very vague idea. In fact, I don't know how to prepare the statement at all. I need to refer it now. But as you people have just done it, or you will be doing it in final also, if I'm not wrong. So you people should be well versed with it. Because once I completed my CMA, my entire work was in costing. So I'm far away from accounting. I know the basics. Few basics, not all basics. In terms of costing, I'm well versed with it. So you people should be well aware of all these basic terms. At least you get into the job. Now, once you get into the job, you will get a specialization. Then you will get experience in that particular specialization. Job ke specialization maarbothunnu kada. Some may get into taxation. You people will be thorough with taxation, but not with accounting treatments. Some will get into costing. Some will get into law. Some will get into GST. All these are oceans when it comes to subject. So you will not have any time to refer to any other subject apart from these things. So till you get into a job, you should be thorough with all these basics. The first question that they asked me when I went to interview is, what is the difference between methods of costing and techniques of costing? That was the first question that they asked me. And I am quite confident that here 90% of the students don't know the difference between methods and techniques of costing. That was the first question. They only asked me 2 questions. That was the first question. The second question was, what do you mean by job costing? Why they asked that question? Because it's a manufacturing company and they undertake jobs. These are the only 2 questions that they have asked me. I was lucky enough to answer 1 question, and obviously you can guess job costing. Because don't forget one thing. As we go to the upper levels, we unfortunately forget the basics. And in interview, when it comes to technical round, they focus on why? Because he knows only basics. Because basics are easily available on the internet. He does not have the in-depth knowledge that you people have. But you people don't have the knowledge of basic. But he will have it. If you refer to any costing author book, the first difference that they explain, everyone needs to go to introduction, right? Introduction itself, that is clearly mentioned. What are methods? What are techniques? మనకి రాదు కాది ఊరుకోండి సార్. Once I answered job costing, then I understood how to prepare for interview. You have to study the company for which you are going for an interview. But to understand the nature of business and the profile for which you are giving an interview. Now, basing on that profile, you have to prepare the basics. It's more than sufficient. He did not ask me contract costing. He did not ask me process costing. He did not ask me any other method or any other technique. In fact, once I got the job, I got into my job. I came to realize that I am much more knowledgeable enough than the person who has interviewed me. And the person who interviewed me is my boss, CFO, Chief Financial Officer. He is also a chartered accountant. But as I said, once you get into employment, you will focus only on one particular area. So, than తెలిసిన basics అడిగాడు అన్నాడు అంతే. అదే ఎందుకు అడిగాడు? Because of the nature of business the company is undertaking. What is meant by job? That was the question. Okay, job costing I explained. Then immediately he asked me what is meant by job. What is meant by job means job, sir. Specific work. Specific work. It is different from any other work. That's why instead of using the term work, we are using the term job. So when one work differs from other work, we have to prepare separate cost sheet for each work or job. That's what they used to do in that company. There's a hint to you people now. When you want to attend an interview, study that company. How to know about that company? You can easily access financial statements. If you are appearing for finance role, now appeared for costing role specifically. So entire questions were related to costing. Now if you are appearing for finance role, definitely they will pose questions on financial statements. No, they will pose questions in such a way that as if they have prepared financial, but for your kind information, they don't know nothing about financial statements. About that company. They just want to check you out. Have you gone through it or not? And they want to test your confidence level. That's what they did when I appeared for ECIL, Electronics Corporation of India Limited, the company which manufactures EVMs. The only company in India which manufactures EVMs. ECIL, Electronics Corporation of India Limited, located in Hyderabad. The first question was, have you gone through your financial statements? No. That was my mistake. I have not gone through it. Why? I did not have any answer. Second question was, just imagine that it's a loss-making company. Have you appeared for interview? No. Now, whether to know whether it's a loss-making company or profit-making company, you have to go through. Then when you know everything, why haven't you gone through financial statements? That was the end of my interview. That's it. Chala sharp counter. Basic things now. If I gone through the financial statement, the first question will be, what is the profit? What is the performance? Have you gone through the notes or not? Being a professional, rather than going through financial statement straight away, we have to go through the auditor report first. There we have to see whether auditor has qualified any information or not. Then we will refer to the profit, because when it comes to balance sheet and profit and loss, everything are numbers, right? The analysis part comes in the report. basics ఇవన్నీ కూడా being a professional you should be able to differentiate yourself from a normal person. Basics. And questions depend on the kind of role that you are appearing for. Finance role, separate questions. Costing role, separate. Taxation, separate questions. Please be careful of that, because within a span of 6 or 7 months or 8 months, definitely you people will be attending interviews. So keep these things in mind. And they are checking the attitude also, whether this person is willing to learn from us or not, or he's showing the attitude that he's a qualified person. Because generally what I have seen is that once a person gets qualified, automatically he start giving some sort of attitude. The moment you start giving attitude, that means you are not willing to learn. And you will you will not be loyal to the organization. So please be careful of these things. I hope they are teaching all these things in your CRT. These are very important. As the competition increases, so do the scrutiny. You may not get into interview hall itself, Nana. Before that itself, you will be screened. Just by on your sitting posture. If you cross your legs, they are not going to allow you. Legs cross చేయకూడదు. ఐడియా ఉందా? ఇంటర్వ్యూలోకి వచ్చినప్పుడు లెగ్స్ క్రాస్ చేస్తావు అనుకోండి, ఎవరు చూపిస్తున్నావు కాళ్ళు? నీ కాళ్ళు నీ దగ్గర ఉంచుకో. ఇదేమన్నా బాహుబలి రామకృష్ణ మూవీయా? కాళ్ళ మీద కాల్సిన కటప్ప రారా అనగానే చాలా ఎఫెక్ట్ చేస్తాయి నాన్న. When I attended the interview, they were also particular about color of shoe, color of. ఇప్పుడు అదేం లేదు. Attitude. That means, are you willing to learn or not? Are you willing to improve your knowledge or not? Second thing, whether you have basic knowledge or not. And they're not going to test you in detail, because he himself should have that knowledge, right? If you're attending for Deloitte or E&Y, they will focus on the core area for the profile that you are attending. Basics important. Prepare ayi L&D. It's better to prepare rather than repent. Prepare ayi L&D. Basics. Why I am explaining all these things? Because generally students are, sir, we know all these things. Yes, Baba, I know that you people know all these things. But why they have put this paper as a elective paper? Because at the time of interview, students are able to answer all the complex questions. When it comes to basic questions, in fact, the interview starts with a basic question. There are two things: you getting interviewed or you running the show. One will be completely done by the opposite person, and you will be simply giving answers yes or no. Other, you dictating the terms. It depends. మన ఇంటర్వ్యూ చేస్తాం, వాడు మనల్ని చేస్తున్నాడు. రెండు జరగచ్చు. It depends on the attitude. If you are very desperate about the job, you literally beg him for the job. But if you are confident about your ability, then you will have some sort of confidence. If not this job, you will get some other job. I'm not saying that to be arrogant, but to have some sort of confidence on yourself. Arrogance వేరు మళ్ళీ, అడుక్కో అది కాదు. ఎబిలిటీ ఉన్నాము, ఇది కాకపోతే ఇంకోటి. The moment you start feeling that, you will not fear the interview. You will not fear the questions. You will give straightforward answers. Sorry, sir, I don't know the answer. Next question. That's what they're checking as of now. Are you confident about yourself or not? First job చేసినప్పుడు 2 questions కదా, second question బయటకు వచ్చేసాను. And I was not confident about getting the job, Nana. Short list లో వచ్చింది. Later on, I asked. Then I came to know they were looking for quality rather than subject, because they were quite confident of teaching subject to the normal person, but the attitude. First question, sorry sir, I'm not aware of the question. It's my mistake. I should be aware of that particular question, because being a cost accountant, I should know what are the methods of costing, techniques of costing. Purpose. Methods are meant for determine the cost. Techniques are meant for control the cost. Control the cost. Without determination, you can't control anything. Once I went into the practice, into the job, I started learning all these things practically. But basics chala important now. Next, cash flow statement.
The cash.
Right, Nana?
The cash flow statement underscores the quality of profit earned.
Yes, Nana. Bookish profit may be different, but actual cash flow may be something else. You can simply implement the profit by increasing the items. But really, your profit may be not that much, Nana. For that reason only, we need to focus on cash flow only. There should be some match between profit and cash flow. Next row.
Profit, which is the residual form, the income statement previously
Is accretion to the working capital of the enterprise. Next, Nana.
thus profit earned is represented in terms of components of working capital.
We know how to calculate working capital, right?
In order to understand the cash component of the profit, the cash flow statement is prepared, which details the inflow and outflow of cash and cash equivalent.
Next, Nana. Statement of changes in equity.
The statement refers to the reconciliation of the opening and closing balance of equity in a company during a particular reporting period.
Next, Nana.
It explains the connection between a company income statement and balance sheet.
Company income statement and balance sheet. If there is increase in equity, automatically there will be increase in your liability, isn't it? And if it decrease in your equity, Nana, automatically what will happen? Your cash will decrease. That means you have to pay. You have paid some amount, isn't it, Ra? When there is decrease in your equity, that means what? You have paid to equity shareholders, right? Amma? Increase in equity means shareholders has invested in our company. Cash increases. Decrease in equity. Cash, there are several things. Basic thing is nothing but cash decrease. So basically, changes in equity will definitely have impact on your items, profit and loss and balance sheet. Next, Ra.
Explanatory notes. These are points wise explanation to the various entries of the income statement, balance sheet and cash flow statement.
Basically, opinions given by the company. Not opinions, what is the procedure that they have followed while preparing so and so statements. Okay. Next, so these are all the different statements, financial statements. Next, state the significance of financial performance analysis. Read it, Nana. Given in December 21 examination for 4 marks.
Significance of financial performance analysis. The financial statements give two important perspectives, performance and financial health. The financial information needs of the users of financial statements are varied, which are mentioned below.
So different people use this financial statement in different ways. First of all, the financial statements are important from 2 point of views. One is performance. When we talk about performance, we're talking about profitability. Another one is financial health. This is expressed in terms of state of affairs, nothing but solvency, liquidity and solvency. Next, Ra.
Trade creditors and supplier. Trade creditors are interested in the liquidity of the firm. The suppliers and other creditors are interested to know about the solvency of the business, i.e. the ability of the company to meet the debts as and when they fall due.
We know what is meant by solvency, Nana. When a company is said to be solvent, when the assets are more than your liabilities. Okay, that's a basic statement. Okay, for this we need to consider certain points and we need to ignore certain points. But simply stating, if the company is able to meet its liabilities, then the company is said to be solvent. So, basing a creditor, a lender who wants to give money or who wants to give credit to the company, it wants to know whether the company is solvent or not. Because if the company is solvent and he has lent money or is given credit, then definitely he can write it down as bad debts. A creditor has given money for an insolvent company. That means what? There is no chance of receiving any money from the company. So what he has to do, he has to straight away declare it as bad debts. Rather than suffering these consequences before giving credit to any person or before giving credit to any person or any company, the company has to check the solvency. That's what banks do. When you apply for a loan, banks ask your income statement or returns to check what is the kind of money or income that you are earning on regular basis. Does you have sufficient amount of income or not to repay these loans or not? If they're happy with it, then only they will take forward the procedure or they will simply reject your application. Next, Nana.
Bondholders and lenders. They are interested in the cash flow ability of the firm,
Okay.
structure and major sources and uses of funds, probability over time and projection of future profitability.
Next, Nana.
Lenders to the business like debenture holders, suppliers of loans and lease are interested to know the short-term as well as long-term solvency position of the organization.
Now, how to know short-term solvency of the firm? Just by referring to the balance sheet. But what about long-term solvency? For that, they will ask credit rating of the company. They will ask credit rating of the company. That means they will ask the company to get certified from so and so credit agency. Just like we have CIBIL score for companies, I think if I'm not, we have CRISIL score. So they will rate the company A, AA, 3As, 4As, -A, C. In this way, they will give the rating. Higher the rating, higher the solvency, lower the rating. So while giving this rating, not only they will look at past and present performance, but also they will look at future prospects. First thing, what is the source of revenue? Projections. How to check it, sir? Every company has order book, right? Every company has order books. For example, if I'm not wrong, when it comes to BHEL, as of now, it has orders for sufficient for 2 years. 2 years worth of orders are readily available in its book. It has to complete, it has to deliver it. That's it. That means for a period of 2 years, there is no need to worry for BHEL. It has revenue. Now, if the company does not have any orders on hand for future, definitely there's a big question mark when it comes to earning ability of the company. Likewise, expenditure. How many employees are getting retired in the organization, from the organization? What is the attrition rate of the organization? What sort of technology they are using? Is there a need to invest huge amount of money in future or not? Or it is already done? All these aspects lead to expenditure. So what is the source of income and where it needs to spend? Depending on that, they will come up with the projections and they will give the rating. These ratings will be used by bankers and other investors and decide whether to invest in that company or not. Because basically when it comes to investors, they are not concerned about past and they are not worried about the present because everything is visible clearly. They are concerned about the future. So for that, they ask for certification by a proper agency. Next, Nana.
Investors, they are interested in present and expected future earnings as well as stability of these earnings.
It's all about speculation. When it comes to investor, everything is related with risk. What sort of risk the company is willing to take, Nana? Appraisal of the firm's profitability and financial condition. Next, Nana. Management.
They are interested in internal control, better financial condition and better performance.
Now, who will define whether we have adequate internal controls or not? Auditor. Auditor will define. The basic purpose of auditor is to define according to standard of accounting, standard of auditing. The basic purpose is to define whether sufficient internal controls are implemented in the organization or not. And it should be specifically mentioned in the financial statements in auditor's report. These internal controls are necessary and all these internal controls are being implemented in the organization effectively. This sentence plays a very important role. This gives confidence to the investors. Because if internal controls are strong, then we can avoid frauds. This difference between mistake and fraud. And this is also exclusively dealt in auditing. Mistake is acceptable, but fraud is done deliberately. Which will not only affect internally but also externally. All these things are covered here, Nana. So management is concerned about these things. Okay. So these are the significance of financial performance analysis. Okay. Now question number 13 is important. This is newly added in the syllabus and this is important. We already know what is this, Nana. So but this is newly added in the syllabus, new syllabus. So it is important. We will stop with this question, Nana. What are the different types of financial performance analysis? Let us read it, Nana.
Financial performance analysis can be classified into different categories on the basis of material used and modus operandi.
I forgot to highlight these two, Nana. Please highlight these two. Materials used and modus operandi. What do you mean by modus operandi? Method, basically. How you want to use it. Method of operation. Okay, right. So material used.
Material used. On the basis of material used, financial performance can be analyzed in the following two ways.
External analysis and internal analysis. Nana, what do you mean by external analysis? Read it, my dear.
This analysis is undertaken by the outsiders of the business, namely investors, credit agencies, government agencies, and other creditors who have no access to the internal records of the company.
Okay, Nana, next round.
They mainly use published financial statements for the analysis And as it,
Whatever the information that is published by the company, only that information is available to external users. Examples are cost sheet is an internal document. It will not be available to the external users. That information is only available to management, but not to the creditors, not to the bankers, not to the credit agencies. So that sort of material is only available to management, whereas profit and loss account, whereas balance sheet, whereas auditor's report, whereas cash flow statement, this sort of material is available to external parties or external agencies. Okay, Nana. So when it comes to analysis, what sort of material is available to us, or what sort of statements are available to us? Only some statements are available to external. When it comes to internal parties, all sorts of statements are available. It's up to the management which statement they want to take. Next, Nana. Internal.
internal analysis. This analysis is undertaken by the persons, namely executives and employees of the organization, or by the officers appointed by government or court who have access to the books of accounts and other information related to the business.
Or officer appointed by the government. Generally, this happens in case of liquidation. Or in case of government organization, we have an auditor called as CAG auditor. Nothing but he does two types. One is normal audit and the one is proprietary audit. Proprietary audit. Sir, what do you mean by proprietary? As of now, even big private companies are asking for proprietary audit. Now, when it comes to audit, I'm only concerned about one thing: 2 plus 2 equal to 4 or not. Now, whether the 2 is correct and these statements, whether proper documentation is available to support this 2 plus 2 or not, isn't it? In proprietary audit, I am concerned why it is 2, why not 1? Why it is 2, why not 1? Okay, there is a thing called related party. There is a thing called related party. I hope you know what is related party, Nana. I'm not aware of all the standards and everything, but I know what is related party. Okay. For a subsidiary, a parent organization can be called as related party, right? Isn't it? Let me give you an example and how proprietary audit pointed out this point, highlighted this point in his report. It's a practical situation, real life situation. I used to work for an organization called as APHMEL, Andhra Pradesh Heavy Machinery Engineering Limited. We specialize, it's a quasi-government organization or a subsidiary of Singareni Collieries. Subsidiary of Singareni Collieries. Singareni owns 98%. So my first organization was APHMEL, subsidiary of Singareni. Singareni is into coal mining industry. APHMEL specializes in manufacturing heavy equipment for coal mines. We manufacture conveyor belts which are used to transport coal from one A point to point B, 3 or 4 kilometers. We used to manufacture drilling machines or drive heads. Just like for a crane, instead of having a bucket, we have a drive head, Nana, which keep on digging into the mines. We have two types of mine, open cast and closed mines, right? Open cast means you keep on digging it. Closed mines means you dig it in the form of a tunnel. So whatever the type of equipment that is required for coal mining is manufactured by APHMEL. Okay. Now, since it was a subsidiary, in coal mining industry, especially when it comes to closed mines, to protect roof from collapsing, we need two things. One is a steel plate and the one are called as roof bolts. The length of each roof bolt will be 5 or 6 meters, which will be drilled into the roof. Okay, so plate ila petti samata. So we will protect the roof from collapsing. Now, generally, when it comes to any organization, what they will do, they will call for tenders. Companies will quote it and they will choose least quotation and give the orders, isn't it, Nana? But Singareni, what it did, Nana, instead of doing all these things, since it was a subsidiary, it had a moral obligation to look after the subsidiary. So straight away, it gave the entire order to the, and there is nothing wrong in that. It has every right to do it. Because what Singareni said is that it's my first duty to look after my own rather than going for the outsiders. Because it is also my organization. If I'm paying it to, that means I'm taking it from top pocket and keeping it in the bottom pocket. That's it. There is no loss to the Singareni. If I'm paying more to APHMEL, It does not mean that I'm losing something. I'm just shifting from top pocket to the bottom pocket. That's the explanation that they have given. Now, when CAG audit was, or proprietary audit was conducted for APHMEL, he simply raised a question. Price quantity is given by Singareni. Price is also determined by Singareni. There is no process of any quotation, any tender, none. Everything, even Singareni used to give us purchase order directly. We need these many roof bolts at so and so price. We never used to quote for it. Based on the parent and subsidiary relationship, they used to do it. CAG raised a point. How can we assume that the price determined by the Singareni is not less than the market price? If it is less than the market price, that means who is losing? APHMEL. How Singareni will justify it? This is called proprietary audit. In normal audit, what they will do, Nana, they will check all the documentation work, whether they have received purchase order or not, whether they have supplied accordingly or not, whether they have received any payments or not, is there any outstanding, everything will be checked, Nana, but they will not look in this way. So in proprietary audit, they have raised this point. Yes, it's a parent organization. It wants to look after APHMEL, very good, but whatever the price that is determined by Singareni, it appears to be a one-side show. Everything is determined by Singareni. APHMEL has no right in negotiating it. So what is the guarantee that this price is on par with market price? So that APHMEL is not at losing end. That was the question raised by proprietary audit. This question kept on appearing in proprietary audit report for a period of 6 years. Because there is no proper justification for it. Because as I said, there was no procedure. There was no procedure. If there were quotations, if there were tenders and quotations, then Singareni would have submitted the quotation. These are the quotations. Basing on that, we have given an average selling price. So it is on par, but there was no system there. Later on, proprietary auditor himself dropped that question, saying that it's of no use keeping on mentioning the same thing again and again and again, because the relationship is entirely between parent company and subsidiary company. It wanted to support it. Okay. That is called proprietary audit. They want to check, yes, numerically everything is correct, but is that number reasonable or not? That's the proprietary audit. To carry out this proprietary audit, he will check each and every document from point A to point Z. That means whatever the documents that are accessible to management, he can ask for any document. You can't hide anything from him. Adutadu kuda, if you have paid any penalties, why? You could have avoided these penalties. The question anta kuda why medu untundi akkada. Just like audit, but in a different way, Nana. Generally, it is performed in government organizations. But as of now, big private organizations also want the statutory audit to perform proprietary audit. To check whether everything is, see, S 2 plus 2, numerically everything is correct, documentation is there, but I want to know whether it is correct amount or not. Are we overpaying or are we getting less paid? We want to check all these areas, okay? So, internal analysis ante idostund Nana. So, officers appointed by the government, liquidators kavachu, okay, or court who have access to the books of accounts, Nana. And when you go to NCLT and declare yourself as sick, when you declare sick, Nana, automatically the entire organization will be handed over to some other person, right? Either to liquidate it or to run it for a certain period of time. Am I clear? Okay, Nana. In that case also, you have to hand over entire information, all the books to that concerned person or court. So if who have access to the books of accounts and other information related to the business. So this is about material use, Nana. Next one is modus operandi. Read it, my dear.
On the basis of modus operandi, financial performance can be analyzed in the following two ways: horizontal analysis and vertical analysis.
Horizontal analysis means period wise, right? Yes, horizontal. Now, period wise. Last year, current year. Comparative balance sheet. Okay, read it, Nana.
In this type of analysis, financial statements for a number of years are reviewed and analyzed.
That's sufficient, Anna. Underline that one. Number of years are reviewed and analyzed. Next row.
The current year's figures are compared with the standard or base year, and changes are shown usually in the form of percentage.
Generally, we will use percentages. Then only it will be easily understandable by the management. Okay, next row.
This analysis helps the management to have an insight into levels and areas of strengths and weaknesses. This analysis is called dynamic analysis as it based on data from various years.
Next, Nana.
Vertical analysis.
Underline the last part of the sentence, Nana, which is called as dynamic analysis. Horizontal or vertical? Horizontal, Nana. So underline the last part of the sentence, which is important from its point of view. Next row.
Vertical analysis. In this type of analysis, study is made of quantitative relationship of the various items of financial statements a particular date.
We will be comparing with different items of a financial statement in a single year. Vertical analysis, Nana. So here in a single year, we will be comparing the relationship between different items. Next row.
This analysis is useful in comparing the performance of several companies in the same group.
Example, GP ratio, net profit ratio. Here we are comparing two different items, right? We are calculating GP ratio of one company and comparing with the GP ratio of another company. Okay, next row.
Or divisions or departments in the same company. This analysis is not much helpful in process analysis of firm's financial position because it depends on the day for one period.
Because this entire information is dependent on one particular period, we will not be able to understand the true performance of the company. When you want to understand the performance of a company, basically we need to compare from 1 year performance with another year performance. But here we are only taking 1 year performance into consideration. So we may not be able to know whether the performance has increased or decreased. Am I clear? When we talk about performance, we need to compare the performance of this year with last year. Then only we can conclude whether there is increase in performance or decrease in performance. But if you are focusing only on this year information, you may not be able to understand whether there is increase in performance or decrease in performance. That is a major drawback here. Next, Nana, this analysis is also called
static analysis as it's based on data from date or from one accounting period.
Next, Nana.
However, it may be used along with horizontal analysis to make it more useful and meaningful.
Both together will be useful for us. Both together will be useful for us. How, sir? We have compared 2 years data and we came to know that there is increase in performance. Now we want to know in which area we have improved and in which area we are lagging behind. There we will use again vertical analysis. So vertical analysis alone is not at all useful, but horizontal and vertical analysis together is useful for the organization. Okay, so these are the two things. Now, when it comes to performance analysis, it can be divided into 2 parts: material used and modus operandi. Modus operandi means method of analyzing, basically. Method of analyzing. Either you can analyze horizontally or vertically. We'll continue in the next class. Thank you.